I'm Jared Pratt, CEO of Granite Peak Associates.
I'm Heather Piazza, Tax Manager at Granite Peak. So Jared,
Yes.
my client's LOI just got accepted, so they're moving forward with buying both the practice and the real estate. How do I set those up entity-wise?
Yeah, so even though you're buying everything, right? But at the same time, you got to keep everything separate. So the real estate is housed in its own LLC vehicle. The practice is going to be bought, again, through an LLC, PLLC, but big takeaway there, separate entities for the separate good assets.
Does that mean I file two different tax returns?
Potentially, yeah. It depends if we have multiple individuals that own each of those entities. If you're an S corporation that has its standalone tax return, if you're buying the real estate through an LLC, potentially you have a separate filing if you're buying it with another individual. If it's just yourself, the IRS treats that as what's called a single member LLC. So it's a disregarded entity. You get the limited liability protection without the hassle of filing a separate business return there.
Okay. And then how do I pay rent from the practice to the real estate?
It's pretty straightforward. We have to define what that monthly lease payment should be. You never want the lease to be just enough to cover your mortgage payment that's coming out of the real estate entity. So every month, if your mortgage payment was $8,500, we're looking to probably set that base monthly lease at about 10 grand to build up some excess cash that's moving into your real estate entity. The benefits there is twofold. One, there's some tax benefits long term, and two, we want to build up that cash because we want to give you the flexibility if you decide to make accelerated debt payments down the road.
What about the real estate taxes or yard maintenance or even maintenance on the building?
Yeah, great question. So now you're getting into the structure of the lease. Our default is what's called a triple net lease. So it's the most basic, most vanilla form of lease there is. Essentially what it is, it's for the real estate entity, there's two activities every month. You have your rental income coming in and you have your mortgage payment going out. Anything you just hit on right there, the real estate taxes, the property insurance, the utilities, anything else related to the building for minor maintenance and repairs, everything like that is paid out of the practice. So in the heart of it, that's what a triple net lease is. It's a very straightforward document because you're dealing with owners that own both. These documents can change at any point, so don't think that what you set day one has to be what we're using in month 24. It's a fluid discussion, but the importance there is at least having some form of documentation in place.
Great to know. So I should set up two separate entities for the real estate and the practice. The practice will pay the real estate my rent payment, which will cover the lease payment, and from there I need to draft up a lease agreement, typically a triple net lease.
100%. That's the direction to go.
Perfect.